Hi, I'm Jen Beeston. Today I want to talk to you about what to do if your loan is declined. I know, there's a lot of emotions if your loan's declined. You're upset, you're sad, you're mad, you're ashamed maybe, a little embarrassed, but you shouldn't be, okay? There's two big reasons why people's loans get declined when they shouldn't. So I'm going to cover those with you right now. So first of all, if your loan gets declined, I want you to ask the originator you're working with why. Credit score, debt to income, property, what was the reason the loan was declined? Okay, that's very important because you're gonna get a second opinion. You know, you wouldn't just don't accept it on the first thing. Okay, so you're gonna get a second opinion. Now here are the two big reasons people get declined. The first one is the individual lender's guidelines. So I work at Guaranteed Rate Mortgage where I have 20 different investors in almost every single segment, meaning FHA, VA, conventional, jumbo. I've got all these different pots to pick from. And what I can tell you is that some investors won't go below 620 credit score. Some won't go below 640. In jumbo world, I have an investor that will go to 680, but then I have 10 that won't go below 700. So if you had walked into one of these 10 places with a 690 credit score, they would have said bye-bye or get your credit score up. Whereas I know if you walk in this guy or you call me, he's gonna do it. They're gonna do your loan. Your credit score doesn't matter because they'll go to 680. So it's really important to understand that different lenders have different overlays. And what an overlay is it's basically a risk appetite. How much appetite for risk do they have? Okay? Some have a lot, some don't. And as a consumer, it's gonna be really hard to figure out which ones are more likely. So that's why a lot of the time you want to talk to a lender that has all these different pots because they can say, okay, yes to this, no to this. On most files, I'm looking at 5 investors saying yes and 15 saying no. Another big reason we see declines when you can actually make an approval is acreage. So a lot of banks and credit unions don't want to do more than 15 acres, but there's a lot of other investors that will do more than 15 acres. But if you had gone to the people capped at 15 and you wanted to buy a 20-acre parcel, they would have said bye-bye again. But all these other people would have said, yes, we love you, we want to do your loan, come to us. So you need to understand that different lenders have different overlays, okay? Now, the next reason why your loan might get declined is your actual individual originator. Now, a lot of times people go, oh, I'm working with XYZ company and it's a great company. Yeah, that could be true, but it's actually the person sitting in this chair who's putting together your loan, structuring your loan, and their knowledge of guidelines that means whether or not you're going to get approved. So you could have someone in the exact same situation I am with 20 different pots to choose from, but if they only know what's in pot A and pot B, you're hosed. They don't know about the other 18 pots. Like, these could be no pots and those could all be yes, but they don't know their guidelines. So you really want to make sure that the lender you're working with knows their guidelines, okay? The other thing is there's some telltale signals that you're working with a lender that honestly should retire and leave the business because they're terrible. The first one's going to be if you look at your loan application and everything is wrong. So for instance, I was doing a second opinion yesterday and I looked at the disclosures that had gone out. They had in California, for a house that was $600,000 a purchase, property taxes at $40 a month. Yeah, that is so far from the right number. It's insane. So this poor borrower was like, oh, my payment's gonna be $2,300. And I'm like, no, it's not. They're wrong on the property taxes. They have your homeowner's insurance at $7 a month. They have your HOA dues that are $211 at $8. This whole thing is a hot mess. In addition, they had that the borrower was not gonna live in the house, even though they were gonna live in the house, and it was an FHA loan. For FHA, you have to live in the house. So the whole thing was structured for failure. And there's a huge misconception that it actually doesn't matter which lender in an organization you work with. It's so wrong. It's so wrong. It's like, I know personally from knowing a bunch of different mortgage originators who I would work with and who you could not pay me to work with. They work at the same company. It's just you need someone that knows their guidelines and knows how to structure a file. Because in underwriter, if they turn in this hot mess of a file, an underwriter's not necessarily going to know everything you told the originator that they didn't put in there. they're going to look at what the originator gave them. That is all they see of you and your documents, and they have to say if it's an accept or a decline. So if you give them a hot mess, it's a decline. But if you have an originator that knows their guidelines, puts your file together, structures it properly, gets the correct documentation from you so that you will get approved, you will win, okay? So if you are declined, please get the information as to why you're declined. Feel free to give me a call. I'm happy to look in all my 20 pots to see if we can turn it into an approval, but just don't beat yourself up. Get a second opinion. You know, if your credit score is 400, yes, that's going to be a decline across the board. Except actually, I think there is an investor that does that now. But we would talk about that. So once again, Jen Beeston, Guaranteed Rate Mortgage. I hope this has been helpful, and I hope that if you were declined, we can turn it into an approval. Thanks so much for watching.